Welcome again, Mark and Jono from Business and Bare Feet.
Hey, mate.
I'm well.
Good.
Today, we're going to jump into something that might be really popular. It's the investment journey.
Mm-hmm.
You know, there's this concept of getting money behind you and rocketing your business into superstardom on the back of somebody else's money.
On a TV show.
Oh, there is a lot of TV shows out there talking
Maybe
about
we'll
this.
have our own one day.
Completely opposite to bootstrapping. If you haven't seen our bootstrapping episode, please check that out.
Yeah.
We're not advocating one or the other, but we'll talk about the investment.
or it's the post-bootstrapping journey.
It could be.
Yeah. So anyway.
Yeah.
So we're here talking about the investment journey.
The investment journey.
So how you get finances, resources. It's not just money, but getting resources into your business to get it growing quickly.
So let's start. Sorry, we've got a few mosquitoes around at the moment. Let's start with this term investor. Everybody's out there looking for an investor, and you've probably heard the term angel investor. The angel investors are often the second group of investors that have come along. The first are what we call the 3 Fs. Friends, family, and fools. That's it.
Yep.
Somebody that's put a little bit of money, a bit of time, they've given you some resources, they lent you a car, they used your shed. All these people are giving you some resources.
Yeah.
And you got yourself moving. And you've got yourself a minimum viable product, and you might have a customer or two, and you've got a bit of a business model forming, and you're going to run out of money soon. And you don't want to, because you think you're finally onto something.
Yeah.
So you go looking
Or you're just
around.
at that point where you know it's kind of a click.
Yep.
A click over the line, and it's like it's off.
Yeah. You think.
You
hope.
Yeah.
So you're going looking for an angel investor. Angel investor is a particular type of investor that will come in early. In most countries, they have to be fairly large investors. They've got a bit of money behind them.
Yeah.
And they take quite a lot of risk in your business, because you really don't have much of a business at this point in time. It's probably not worth that much. But with the right amount of money, it'll grow very rapidly, probably the highest growth phase that you'll have for many, many years.
So dealing with angels, what do angel investors, what do people need to look out for?
Okay, first thing is you want to actually understand what the angel investor is trying to do.
Right.
Angel investor is going to come in, put some money in, or a group of angel investors, they're going to come in for a period. And we talk about a 5-year period. They will put their money in for the first 5 years, and they're looking for a return. They are investors. They're looking for something to be coming back.
They're more like a bank. They want to get some interest out.
Not in interest. They're looking at about a 10 times return.
Yeah, I understand. Yeah.
So if they put $100,000 into your business, they want $1 million out in 5 years' time. So they want to look that your business is actually going to generate that sort of profit, and their share of it, the value of your business, is going to be at that level. There's all sorts of angel investors out there.
Yeah.
They've all got their different ideas. Some work through companies, partnerships, investment funds and so forth. Some of them have got their preferences for industries or size and things like this. They're very widely spread.
So how do I know if my business is angel investor ready? Now we'll cover this in more detail, but just some summary items. We'll cover this in more detail in another video and in some cheat sheets.
Fundamentally, you're going to have a business that can scale profitably very quickly.
Yep. Because they're going to take a reasonable chunk of your business quite often, aren't they?
Depends on what stage you're taking the investment, and timing of angel investment or any investment is
very
one
critical.
of the big questions.
Yeah.
You get the investment
We've
too
seen
early.
some bad timing, haven't we?
We have. You know, we've interviewed some people where they lost 30-40% on their first round, their first angel investment round, and there are others that the angel investors came in at 2 or 5% because they were more advanced.
Yeah. And different countries handle it differently too.
Indeed.
We've found that the US angel market is greedy is probably want less, probably because it's more competitive maybe, I don't know, but they seem to be more aware of they're giving back to something as well. Than they are, say, here
different
in Australia.
culturally in places like Silicon Valley and Texas and Boston.
It's a very
and
mature
so forth.
culture.
New York,
and, a lot more money there, and so a lot more risk can be taken, I guess. But,
So a typical angel investor is going to make a series of investments. You're not the only one they're going to put their money into. So you need to appeal to them. But they're looking for a business that's going to scale, that's going to make them that return really nicely. It's going to be a business that can probably end up in the stock market, what they call, the first time you float is called an initial public offering.
IPO.
the reason behind that is that the value of your business skyrockets when it's on a public stock exchange where every investment community, mum and dad
has access to it,
can buy shares readily and sell it. So that they're the highest price.
So the two most common that are sort of brought up in the investment space are angels and venture capitalists.
Angels and venture capitalists.
So let's jump into the VC space.
Okay, so the VCs
So we're doing an overview here, obviously. So again, we'll explain VC and the journey of a VC in much more detail.
So the VC often comes in after the angel investor. So the second lot of money, second major lot of money is a venture capitalist. And they're going to look probably for a 5-year period, and they want to multiply their own investment value by about 5.
Yeah.
That's their magic number. But they're also bigger.
It's a much bigger investment.
You know, most VCs don't invest, you know, less than about $5 million. Okay, so and they don't want to take control of the business, so you've got to have a much bigger business for them to come in.
Yep.
And they're going to take you to the IPO. They're going to take you to the stock exchange. So they're looking to rapidly grow to industrial scale production. So angel investors take some of the highest risk, get the biggest return. Your venture capitalists come in and take the next return, and then it goes on to the...
It's a pretty serious business by then.
It is. You know, there's not many businesses that list, even in Australia, under about $30 million turnover each year. Often about 100 million. Now, they might seem big numbers, but they're just zeros on the end of some.
So probably some obvious things there in terms of a business's venture capital ready. It's obviously a much more established. It's probably been running for a while.
Many more people involved in making a decision. The specialists that are looking at the risk, the market, the customers, the pricing, the competitors, all of that sort of stuff. There's prospectuses and things like this that start getting talked about and written, and that requires audits and all sorts of other rules that the governments in your country control about who can put money into you know, fairly risky investments, or traditionally risky investments.
Yeah.
So
cost benefits of venture capital?
They rapidly grow your business.
Yeah. You need to be ready in that space. But mind you, they won't invest. They'll know if these guys are professionals.
They are.
They'll know if you're not ready.
They're looking at the team. They're looking at who's going to deliver this massive growth in the business. Who's going to multiply this business by a factor of 5 in 5 years.
Now, one of the things that I've always found fascinating in the investment space, and I've seen this over and over and over with angel and VC, you see it publicly on TV and things like Dragon's Den and Shark Tank, is, I mean, I know there's a lot of Hollywood involved in that, the TV stuff in particular, but you hear a lot of this about I'm investing in a person, not in the product.
Correct.
Talk about that for a minute, because I think that's a really interesting point, because, you know, we become so product focused when we're developing, and I've been in this space myself. It's like, it's what I do and it's what I have and all that sort of thing, but they actually like who you are.
It's not so much that they like who you are. They don't actually need to like you, but they got to believe that you're going to grow this business dramatically.
Yeah.
You've got to have this capability of growing the business.
Well, I've even seen cases where, I have actually seen cases where they like who they are. I mean, I say like, it's not a friendship thing. It's they like what's in them that could actually help them in another area. So they actually buy the idea, and it's kind of like, oh, well, that's actually got no future, but you can make me a lot of money over here.
Correct.
And I've seen that a bit.
Yeah, so they're trying to back the leaders in an industry, often the global leaders, the people that are doing the biggest thinking, the biggest understandings, the biggest application of some raw technology. The people are more likely to be able to drive it into something really good down the path. Maybe not. So
in terms of who you are and how you present and getting the right deal from an investor. Remember some of the great advice we got from our Aussie in Silicon Valley?
Yeah.
Don't be a dick.
That's what he said, don't be a dick.
And we'll have that video in our community. But he did. It was great Aussie style advice.
The message is be honest, be genuine, be professional. This is not about putting a veneer on you or anything like this. This is about people eyeballing you and seeing right into the depths of your brain and getting confident that
they want to see the real you, because they're going to invest in the real you. And
good times and bad. They want to know how you're going to handle these bad times and how you're going to handle the good times.
That's where you start to realise business, and particularly today, is so much more about people to people, isn't it? It's a fascinating space, business, with the way people do business with people now, rather than just products or services. And it's the same in the investment space. So now, just coming back to investors, we've talked about targeting in another episode, and in terms of building a strategy. Now, one of your strategies is obviously to get an investment. Okay, so So targeting your marketing, targeting your product or your message and whatever.
Yep.
A big chunk of that is actually targeting to investors.
Targeting the right investors and communicating very clearly to investors too. Most of these people may or may not be technically orientated. You might have a technical product. They don't understand it. They don't understand the market. You are communicating in business language to these
And
these
if
business
at
people.
any stage they feel like you've just come in way over their heads, their response is usually, you don't understand who I am.
That too.
Because, well, not because like how important I am or anything like that.
No,
It's
no.
like, I don't get it. You haven't done any research to understand that I wouldn't get it, and you've gone in way over my head. And so knowing that, it's probably not, in marketing we sort of talk about the 14-year-old rule. If a 14-year-old can understand it, it's probably good.
Yeah.
It's probably not that simple, but the language has got to be good and all that sort of thing. But certainly understanding that this person may be a CEO, may be a generalist.
But they may not know your
I
market.
actually had this. I had this when I pitched to probably at the time, one of Australia's the highest personal net worth, owns football teams and a whole bunch of things down in Melbourne. And I pitched a business to him, and we were sitting chatting, and he said, we talked for a bit, and then he sat back in his chair and he said, "So tell me a bit about yourself." And I had an opportunity then to lie and talk about all about the product, and that's what I was passionate about, or just tell him what I was on about.
Yeah.
I said, well, one day I want to be where you are. I want to have businesses coming into me and be able to, this is a while ago now, and he said, "That's really good. I like that." And it went from this very cold, not interested, to probably still not interested in the product, but he actually wanted to do business with me. And
because he suspected that sometime or other you were going to hit something that hits his sweet spot as well.
Correct. Yeah.
And he wanted to be first in.
He did play in the IT space, so he got that. It was
Technology.
around cybersecurity, so he got that there was an opportunity there.
Yep.
But it was very interesting. So I've experienced that firsthand myself as someone who's pitching a business. So being real. And take our advice from our man in Silicon Valley. Don't be a dick. So very important that they're looking at you. They've probably done a whole bunch of research on you. LinkedIn, Facebook.
Maybe a lot of these guys don't have a lot of time.
Maybe haven't done that at
so
all.
they will move quickly and
well, the venture capitalists would have people doing that for them anyway. They'd have teams of people.
If you want to go to a
looking at
busy
stuff.
office, you go to a venture capitalist office.
yeah.
These guys are just flat out the whole time. They're trying to make hundreds of calls, hundreds of investments. They're trying to get the right one for each one. This is a big machine going. So you've got to cut through very clearly and articulate things nicely.
And for example, another pitch I did was to a large retail family in Australia who are now out of retail, and you probably guess who they are by just saying that, but they're out of retail now and they're looking at sustainability for the family going forward. And they've just got a business that purely all they do is look at cash flow for the family. And pitching to that family, but knowing what they were on about and what was important to them. So you could pitch into that space was really important. We could you don't just go and do the same old business pitch.
No, this is the hard part. How many pitches do you need when you're out there looking for investors?
I think you need. I wouldn't say how many do you need. I think you need each one. And as simple as that. I know that sounds like a really silly answer, but you've got to pitch that. You obviously got a model and a business model and profitability, all that sort of thing. But you need to know who you're pitching to. You need to know what.
One of the things with both angel investors and VCs is that they tend to go as a herd. When you take some angel investment fund, you might take 5 or 10 investors with you, but there's going to be a lead investor, the one that's going to spend more time understanding what it is that you're doing, understand the pluses and the minuses. They're going to weigh that up. They might do this whole due diligence process and then share it with the others. And the others may not be as confident, but they trust this investor because they have a history of doing good things, or they're quite diligent themselves, and they'll come in behind the track. Now, they may not have invested previously in your industry or your type of product or anything like that, but that lead investor is often the good part to play to initially. And then you can modify this pitch as you're taking in others.
So a couple of keys here, just because we're getting rapidly running out of time. So a couple of keys here for people to look at. Know what level you're at. So who are you pitching to? Is it the triple F? Is it the angel? Is it someone who owns a business that just says, I want to partner
What
with
are
you.
they looking for?
Yeah, so know who you're pitching to and what you're asking for that, know what you want.
Yes.
Because it is still a negotiation.
Absolutely.
And then obviously be clear on what you're pitching.
Yep.
Don't be a dick. So think about how you present and what's important to you. Again, going back to things like your why, your vision, your values, all those sorts of things. Is there an alignment? Because if there's going to be a break in those things, it's going to be a real struggle.
Having risk is no problems as long as you articulate that.
Yeah.
You talk about how you're handling it.
Yeah, so, I don't think there's anything else really to add to that. I think, and then...
And go looking.
Yeah,
You go
being
looking.
part of that, we talked about connecting and who's on your bus, so
Yeah.
investors are part of those people.
They are part of
So be in those spaces where these guys are hanging out.
They will have a stakeholder relationship with you, whether they invest or not. If
Yep.
they didn't invest, they might still want to see your success.
Yep.
And
And their investment may be giving you clients or
There you
giving
go.
you something else. So have a think about that, where you're at. This is a very important part of the journey, obviously for startup and fast growth business, and all part of that adventure. And we look forward to hearing your stories and hearing how you go. And
particularly
obviously,
your investment stories.
Yeah, and as this community continues to evolve, actually connecting you with some of those people.
Yeah.
Because we do have those people hanging around.
We do.
Yeah.
We're part of
So we'd love you to
investment
come
ourselves.
come and be involved in the community. We do actually have, as part of being a member, you can pitch your business in a 60-second pitch.
Absolutely.
And so you can come and do that with us as well. So, we'd love you to ask us questions about that and have you contribute to the journey so other people can benefit from that as well.
Yeah.
All right, mate. Been
Fantastic.
Great. Yeah.
Thanks
we'll
again.
Call it a day, huh?
Yeah.
Yeah.
Thanks,
we'll look forward
everybody.
to talking to you soon.
See you next time.
Bye.